Welcome back to Mortgage Giants. I'm tall, he's taller. Let's talk mortgages.
Perfect. Big week in mortgages.
Good stuff.
Yeah. Finally some good news.
Yeah,
That's
that's
right.
right. It's been nothing but bad for a long time.
Okay, this is good. So, now this is a bit of a confusing subject,
Yes.
but very important, and a bit of an interesting twist on how we arrived to this new, I'm going to call them interpretation of existing rules.
Mm-hmm.
So, in Canada, there was this legislation called, B20 that passed, and that was the implementation of the stress test.
Yeah.
We've all heard of the stress test, where you were either qualifying not at the rate you were paying, but that rate plus 2%
Yeah.
or 5.25%, whichever was higher.
Yeah.
That was the stress test. So back in the day, if you were buying a home and interest rates were 2.75%, which they were several years ago, you were qualifying at 5.25.
Yeah.
So anyway, that was put into place to protect people because there was some foresight saying interest rates might not stay low forever, and we need to make sure that when people's mortgages come up for renewal,
Mm-hmm.
that they're going to qualify at a likely rate.
Yeah.
So they set 5.25 as the benchmark, and here we are today at rates over benchmark.
Yeah.
Insured mortgages right now are in the 5.69, 5.84 range. So to buy a home right now, you're qualifying at 2% above 5.69.
Yeah. And this is for everything, not just buying.
Yeah.
Purchases, refinance, renewal, all of it.
That was how it was exactly. So qualifying at 2% higher
Yeah.
than where rates are today. Well, that's changed. Now, if you have that, this is for insured mortgages only.
Yeah.
So that's a huge distinction. So you have to know if your mortgage is insured for this all to apply to you.
Yes.
So insured mortgage, you have an insured mortgage if you purchased your home with less than 20% down.
Yep.
And have not refinanced your home at any point since owning it.
Yeah.
So meaning, let's say you bought 5 years ago, you put 10% down, 5% down, whatever that number is, less than 20, you paid that insurance,
Mm-hmm.
mortgage insurance. We're going to say it's CMHC because that's
Yeah.
the most popular public one. There are 3 in Canada though. That means you have an insured mortgage.
Yeah.
Okay. So if you're that person and your mortgage is now up for renewal, 5 years, fast forward, instead of qualifying at today's rate, let's call it 5.69,
Yep.
plus 2%,
769.
which makes it very hard on families. Like
Big
that's
time.
because if you originally bought and you're used to 3%,
Yeah.
now you're trying to qualify for renewal at 7.69. Like that's terrifying. No wonder like people are really panicking
For sure.
about their renewals and if they will even qualify.
Yep.
Rightfully so. Okay. Also, in 5 years, you pay down your mortgage, so your balance is less, and so I haven't personally seen too many people getting jammed up at renewal and not qualifying to make a switch to another bank. But still, it's very possible.
I have seen somewhere there's like a new car loan because a car broke down. So
Oh, yeah.
then now there's like essentially another mortgage
Yeah.
that they have to debt service, which
Yeah.
throws things off. So there is some acquired debt situations, but
Yeah, lots happens in 5 years.
Yeah.
New loans do pop up for sure. So the good news, this is the good news. If your mortgage is insured, you no longer have to qualify at the actual rate we're getting you plus the 2%.
yeah,
That plus 2% is gone and not applicable to you anymore. Huge. That
Huge.
is massive. So this will make it a lot easier for a lot of families to
Yeah.
qualify at other lenders.
yeah,
So what that means, I can't say that this is factual,
mm-hmm.
but if a person bought a house 5 years ago and they barely qualified on just using the benchmark
Yeah,
rate of 5.25,
yeah,
the banks know that.
Mhm.
I think that that's easily, readily available data.
yeah,
We've been seeing a lot of renewal offers coming to buyers at high premiums, like
Yeah.
almost 0.5% to a full percent higher than what the market is able to get them elsewhere.
yeah,
And I think it's because a lot of institutions are saying they're likely not able to qualify elsewhere.
Yeah.
And we're going to offer a higher rate. And if they can go elsewhere, fine, let them.
Mm-hmm.
But those that don't want to put in the energy or effort and will just accept what we're offering them, we'll take that.
Yeah.
We'll
make that extra money.
We'll take that premium,
Yeah.
for sure. So, without that rule in place now, without the qualifying, at renewal, adding 2%, I think that's going to bring a lot more people to play ball.
For sure.
I think they're going to have to say, okay, well, there's a high chance that now they can make a switch, banking options at renewal. And they still might choose to juice up their rate a little bit,
yeah.
which they usually do, but it might be a little less aggressive, and I think the consumer is going to benefit from this.
For sure.
Even if they stay with their current bank.
Yeah.
Tough to say how the banks are going to respond to that and if they will become more competitive, but at the very least, this will help buyers, homeowners, at renewal qualify for the best options and chance of switching at renewal. So that's massive news.
Huge. Like, it should give a little bit of certainty and relief for anybody who's coming up for renewal. Well, insured people who are coming up for renewal.
Yeah, and so again, I know we harp on this a lot, but this is just another reason why you don't sit on your renewal.
Yeah.
Like, know when your date is, circle it in your calendar and set a reminder 125 days before.
Yeah.
Because at that 120 day mark before your renewal, we can start looking and lock you in a rate.
Yeah.
So, again, take control of that mortgage.
Yeah.
Know that you can do things to help yourself. And we ran some models, we ran some scenarios. We were talking to some teachers last week, and you ran some numbers. And I think it was even by saving yourself 0.5% on about 300,000.
It was, we ran the numbers on 0.4 and 0.7.
On how much money?
On, I think it was 290, so basically 300.
Yeah, and that interest savings over 5 years was about $6,000.
Yeah, so it was, I think it was 3,800 for the 0.4 difference and 6,900 for the 0.7.
Yeah, and not to mention the
lower monthly payment. Right, and this is another reason. Like, not only do you need to start well in advance, but you need to talk to a broker, because your bank is not going to relay this information to you. They're going to try and get what they want out of you.
Yeah, and that phone call is going to come and say, you won't qualify anywhere else.
Yeah.
You got to take this offer.
Yeah, they'll pressure you.
Total bullshit.
Yeah.
When we were in that room with teachers, I was shocked that we did 2 sessions, and in both sessions, people spoke out and said, no, that person, and they called me, pressured me into taking the renewal early.
Yeah. Not
even on my renewal date. They told me that I had to take it right then and there and void my nice low 2.84% rate, which should have ran out for another 3 months. They maybe take the new rate at that offer.
Yeah.
I was shocked.
Which is crazy.
I was shocked. Yeah.
But like, this is why you need to go to a broker.
Yeah.
It doesn't mean that like the end result has to be going through us, but we can provide the insight to make sure that if you're staying with your current lender, it's the right move, or going to a new lender is the right move.
Yeah. So great news ultimately for the insured mortgage holders. Renewal should be a lot easier for you. The name of the game is options.
Yeah.
And the last place you want to be is feeling like you don't have the option and you have to take what's given and say, thank you very much.
Yeah.
That sucks.
Yeah.
So we want to make sure that people know if there is options, lay it out, black and white. That's the other thing too, black and white. Get it in writing.
Yes.
Like all these renewal offers, get it in writing and not over the phone. Give me a verbal yes or no right now, and then I'll send you something.
Yeah, exactly.
No. Tell them you're working with a broker and you want to run that offer by a broker. Then they know they have to at least give you a decent.
Yeah, you might be surprised. On the phone, they might change their tone. If they found out that you're with a broker.
Yeah. And then they'll give you probably a more competitive offer. Yeah. And then the broker can say, now I want to work with that. Now I know what the bank has come down to. That is going to be their best offer because they know they're going to be up against another institution.
Yeah.
Now we can go to work with that. And if it's a good offer, like I'd love to tell you, hey, sign that. and know that you did a good job, you did your due diligence.
Great.
But you win. Like, this is a way to help you win. We're not in the business of getting banks more money.
Yeah.
So
we truly are here for the people to make it work.
Yeah.
Like, we're not trying to sway you into something that's not. And if that's your experience with brokers, that's a shame, because that is not the approach.
Yeah. Yeah. That's kind of the broker that maybe shouldn't be a broker. They're maybe doing 7-8 files a year, and they really need everyone to go through. That's a scary broker to work with.
Yeah.
I would say make sure you're talking to brokers that are doing this day in, day out at a high volume.
Yeah.
So they can give you that advice and be selfless.
Yeah.
About it. Because that true sound advice, we want you to take that back to your friends, family, coworkers, and tell them about the honest experience and the black and white. We're putting things on paper for you, and what you do with that is your decision.
Yeah.
But we're here to support you in making that decision in a completely transparent way.
For sure.
Yeah.
Yeah.
So I don't really want to jump. Should we talk about collateral mortgages and that whole, that we can re-extend amortizations in certain scenarios, or maybe is that another topic?
Maybe that's another topic, because that can get quite complicated and layered, and it's not general knowledge.
So that's let's save that one for another day. But ultimately, big takeaways here on the insured renewal space. Last point on this. I think the number was 43 or 47%, I believe, of all Canadian mortgages are going to do a reset in the next 48 months.
Oh, really?
2 years. Wow. Because in, now we're entering into 2024.
Right.
And 2025.
Yeah.
So that would mean 2019 and 2020 were very big years.
Yeah.
Not as big as 2021.
Yeah.
So in the next 2 years, let's call it 45% of all mortgages are going to be renewing.
Yeah.
So they're coming out of high 2, low 3% rates and into mid 5 to high 5% rates if things stay the way they are today.
Right.
So my point on that is that inflation is still sticky. That's the word that everybody likes to use. And the Bank of Canada has recently just made a pause on hiking again. So I think a big part of that is knowing that so many, up until now, variable rate mortgage holders have bared the brunt of this kind of war on inflation and trying to slow spending.
Yeah.
Now, every day, thousands of Canadians are having their mortgage come up for renewal, and they're coming out of that lower fixed rate and jumping into either a higher variable rate, to the tune of 6.2, or a fixed rate in the high 5s.
Yeah.
So more change doesn't need to be done to continue the tightening because of just general course of time. Mortgages are renewing into rates 2 to 3% higher every day just by naturally, clocking out.
Yeah.
So now those families are all going to contribute to hopefully the tightening of excess dispensable cash. Things like appliance purchases, vacations will start to slow down as those families have to re-budget.
Yeah.
So we hope that this is kind of the trend. No more increases are needed, and we can start to see rates come down into as early as mid 2024.
Yeah.
So let's call it 8 months from now.
Yeah.
6 to 8 months from now. So it's not a prediction as much as just knowing that the data is supporting the amount of renewals coming up, and those families are all now going to be participating in the pinch.
Yeah. And which is a good time to talk about the variable.
Yeah.
Because for a while there's been a lot of clients who have had to take the 5-year fixed because that's the lowest rate and that's the easiest qualifying for them. But now there's an opportunity with going at contract rate. You can go in the variable and try and set yourself up for rates coming down in the next year to two if they do.
Yeah.
So I mean, this helps in a lot of different ways.
For
Like, you
sure.
don't just have to take the 5-year fix for this to benefit you.
Yeah.
So
Yeah, no, that's absolutely right. You know, if the variable rate today is 6.2%, and again, we're talking insured mortgages.
yes, insured.
Okay? And then the best fixed rate is 5.69. The Bank of Canada has to lower prime twice, or by 0.5% for you to now be at where you would have been if you took a fixed, and now are we betting that it's going to go below?
Right.
I think BMO had it coming down about 1% by 2025.
Yep.
CIBC was a little bit more optimistic, I believe, and again, these are all forecasts, but
For sure. But it's at least now it's available in the conversation.
yeah,
So
yeah.
it's good stuff.
So
But
take
remember,
advantage.
insured. So you have to have an insured mortgage for this to be in effect. But
Yeah.
there's lots of people out there who have that. So it's
Well,
good news.
Tons, yeah,
Yeah.
tons and tons. So yeah, that is good news. Finally feels good to have some positive news.
And it feels good that there hasn't been giant rate increases every single week the last few weeks.
Yeah.
Like it's been consistent, which is
Yeah, I actually think a couple banks are going to be coming down a touch.
yeah.
We're talking like from maybe 5.84 to 5.69.
Yeah.
But
That's good.
down is down,
Yes.
and that's great. So
Yeah. Good
Yeah.
stuff.
okay, right on.
Excellent. Well, thanks for watching. See you next time.